Something big is happening in the U.S. economy, quietly, steadily, and without much attention from the mainstream press. Tariff revenue is surging under the America First trade agenda, becoming one of the most stable and fastest-growing sources of federal income. For months now, customs duties have broken new records, with the last 4 months marking a clear trend: higher collections, consistent inflows, and lasting policy impact. Since the re-implementation and expansion of key tariffs under the Trump administration, the U.S. has pulled in over $128 billion in customs duties across the past 12 months. That's up from just over $90 billion during the same period 2 years ago. In March 2025 alone, customs duties brought in more than $11.2 billion. These numbers don't lie. They tell the story of an evolving fiscal strategy, one rooted in economic nationalism, strategic decoupling, and long-term independence. Unlike income taxes that rise and fall with employment or corporate taxes that fluctuate with profits, tariffs operate on a different rhythm. As long as Americans continue to consume, tariff revenue flows. And America still imports hundreds of billions worth of goods every month, especially from countries like China, Vietnam, and Mexico. That volume, now taxed at higher rates, is generating enormous income for the federal government without touching a single paycheck. Tariff income has now eclipsed several other forms of federal revenue, including estate taxes and even some categories of capital gains taxes. And unlike more volatile sources of government income, tariffs are consistent. They are collected automatically at the point of entry and enforced by U.S. Customs and Border Protection. There are no loopholes, no deductions, no offshore tax shelters. These policies didn't appear overnight. They're the result of deliberate recalibration of trade dynamics. The U.S. has imposed heavy tariffs on electric vehicles, batteries, pharmaceuticals, semiconductors, and green technology components coming from China. It has taken similar action in other sectors where American dominance has been eroded by decades of cheap imports and offshoring. These tariffs are not just punishment. They are designed to shift global supply chains, create a more level playing field, and protect strategic industries from foreign manipulation. For example, the Section 301 tariffs on Chinese goods now range from 10% to 25% on hundreds of product lines. There are also Section 232 tariffs on steel and aluminum, critical for national security, and newer tariffs targeting artificial intelligence infrastructure, critical minerals, and solar panels. All of this is aligned with the America First doctrine, a trade strategy that puts U.S. production, labor, and innovation ahead of global dependencies. The result? Reshoring has accelerated. Manufacturing investment in the U.S. is rising. Factories are reopening, critical industries are returning home. And while some foreign nations threaten retaliation, the numbers show that America has leverage. Imports are still flowing, consumer demand remains high, and tariff revenue continues to grow. Beyond trade and industry, the fiscal implications are just as profound. Every dollar earned from tariffs is a dollar that doesn't have to come from new taxes or increased borrowing. In an era where the national debt has topped $35 trillion, any stable revenue stream that doesn't depend on squeezing the middle class is a welcome change. Tariffs provide precisely that. Some economists have floated the idea that the U.S. could gradually reduce reliance on income taxes by increasing tariff collections, a concept known as fiscal rebalancing. It's not just theoretical. With over $128 billion already generated and projections for over $140 billion in 2025, tariffs are well on their way to becoming a foundational revenue stream. They're also strategically sound. In a multipolar world where supply chains are fragile and economic alliances shift overnight, tariffs act as both a source of income and a deterrent. They signal that the U.S. is no longer willing to play by the rules of 1990s globalization. The country is asserting itself, economically, politically, and financially. Under Trump's policies, tariffs aren't just tools. They're a philosophy. They represent sovereignty. They enforce fairness. They create accountability. And as they generate billions for infrastructure, defense, and innovation, they also rebuild the very core of American industry. At the same time, trade continues. The doomsday predictions of collapsing imports and skyrocketing prices haven't materialized. Supply chains have adjusted, retailers have diversified, and American consumers, while price-sensitive, continue to drive demand. Imports remain strong, which means the revenue continues to roll in. Over 10,000 product lines are now covered under expanded tariffs, from electronics to machinery, textiles to pharmaceuticals. Every container ship that docks in Los Angeles or Savannah or Houston brings goods that are taxed, and those taxes fuel the American economy. And it's not just China. The administration has begun reviewing tariff frameworks with other trading partners. This includes evaluating trade deficits, currency manipulation, and unfair labor practices. In 2025, Vietnam, India, Mexico, and Indonesia are all facing new scrutiny. Tariff strategies are being broadened to encompass environmental standards, AI risks, and rare earth dependencies. Each of these adjustments further embeds tariffs into the DNA of America's modern economic architecture. They are no longer emergency measures or negotiation threats. They are central to how the federal government collects revenue and wields influence. At their core, tariffs are becoming a silent engine, powering a new industrial revolution, and they are doing so without increasing income tax burdens or expanding the IRS's power. There's something else too: political support. Polling shows that over 68% of Americans support tariffs on countries that flood the U.S. with cheap goods. Over 72% support tariffs on products tied to forced labor or environmental abuse, and over 60% agree that America should not be dependent on any one country for core technologies or medicines. In other words, tariffs are popular. They appeal to both sides of the aisle. They're tangible, they're effective, and they are increasingly bipartisan. This is especially relevant in today's climate, where fiscal responsibility is a top concern and where tax hikes face heavy resistance. Tariffs offer an alternative path, one that funds government priorities, protects national security, and encourages domestic resilience. America is not backing down from global trade, but it is reshaping the terms. Tariff revenue is proof of that shift. It's a signal that the U.S. is willing to defend its economic interests, not just through policy, but through profit. As tariff collections rise month after month, quarter after quarter, they are becoming the quiet giant of American finance. Few predicted it, even fewer understand the scale, but the numbers speak for themselves. This is not a spike, it's a new baseline. Tariffs are now a core part of the federal playbook. Whether or not this strategy continues beyond 2025 depends on leadership, public will, and global conditions. But if current trends hold, it's not unrealistic to imagine a future where customs duties approach or even exceed $150 billion annually. That's enough to fund major infrastructure bills. That's enough to offset corporate tax cuts. That's enough to accelerate American energy projects or defense upgrades without raising taxes. The America First trade agenda is more than a policy platform. It's a financial framework. Tariffs are more than taxes. They are the dividends of strategic independence. And for the first time in a generation, America is getting paid to stand its ground. Thanks for watching Finance Spot. If you found this video valuable, don't forget to like, subscribe, and hit the bell icon so you never miss an update on markets. See you in the next one.